Hello everyone, welcome back to my YouTube channel Legal World. Myself Dr. Seema Goyal. As I have started with this series on the banking law, and in this series I have discussed certain important questions relating to the banking law which are important for the examination point of view. Today in this video I am going to discuss one more important question that has been asked for many times in the previous year exams. That my question is, what do you mean by social control on banks? And if we talk about the social control, Banking Regulation Act 1949 was again amended in 1968 to provide for the extension of social control over banks. For the long period of time, there was hue and cry and big demand for the nationalization of the private banks, mainly by politicians, which had gained momentum after the nationalization. Till 1967, nothing could be done by government to take over the private banks, as there was equally opposing force for the situation on the part of the government. If we talk about the meaning of the social control, in 1967, All India Congress Committee in its election manifesto has laid down that it is essential to bring most of the banking institutions under the social control. If we talk about the history of this institution, firstly in Parliament on 17 December 1967, Sri Moraji Desai have made a statement for social control of the banks. And after this, on 23rd December 1967, a bill was drafted in this regard. And the bill was referred to selecting committee on 26 March 1968. But the bill was ultimately passed and came into force on 22 February 1969 under the Banking Law Amendment Act 1968. The entire provisions of this act collectively called as social control measures over banks. And there is no other definition of the social control. The Amending Act of 1968 imposes certain restrictions on the composition of the board of directors, internal management and administration of the banking companies. And they were intended to ensure that the bank advances were not conferred to large-scale industries and big business houses, but also were directed to other important sectors such as agriculture, small-scale industries and exports. If we talk about the Banking Commission, on 14 December 1967, the Deputy Prime Minister and Finance Minister made a statement in the Lok Sabha, and many provisions for improving the social control of the banks. For this purpose, two steps were taken. That first step was set up a National Credit Council, that is known as NCC. Second one is it introduced legislative control by the amending Banking Regulation Act. On 29 January 1969, the Government of India announced the appointment of Banking Commission with Sri R.G. Soraya as the chairman. The terms of reference of this commission were very old and exhaustive and included the examination of the structure and operations not only the commercial banks but also the cooperative banks and the financial institutions and financial activities. Talk about the details of social control measures under the Amendment Act. First, even before this Amendment Act, banks of India with deposits and 2 crore and above had constituted their board and appointed the whole-time chairman. And this act came into force on 2 February 1969. Now the banks having deposits less than 25 crore were required to comply with the organizational changes before the end of February 1970. And important provisions of the Amending Act of 1968, these are as under. First amending important provision, that is constitution of the board of directors. Now the banks were required to constitute their board of directors within 3 months from 1st February 1969. And the board of directors should constitute not less than 51% of the total number of members, having the special knowledge and practical experience in certain fields, such as accountancy, agricultural and rural economy, and small-scale industries, economics, finance, law, cooperative banking, etc. Second is, this act also empowers the Reserve Bank of India to constitute the board of directors of the bank. In case composition of the board of directors constituted by the bank does not comply with the directions given by Reserve Bank of India in this regard. Second provision is appointment of a whole-time chairman. This act also requires that Indian banks to have a full-time chairman also, who is having professional banker or having experience of financial economic business administration. So long as a person will serve as a chairman, he or she should not have any substantial interest in any of the company, firm, or should not engage in any business or concern. The appointment, removal, and termination of the appointment of the chairman would require the approval of Reserve Bank of India. And the Reserve Bank of India is also empowered to remove the chairman of the banking company and appoint a reasonable person after giving reasonable opportunity to the chairman. And the third provision is restriction on the loans and advances. As per section 20 of the old act, it has also prohibited only the grant of unsecured loans. And section 20 of the new act after the amendment prohibited the grant of new loans and advances, whether it may be secured or unsecured, to directors, management, employees or guarantors, or to the person who have substantial interest. Second is subsidiary of bank company and government banking company are exempted from this provision. And the next provision is that is regarding the extra powers conferred by Reserve Bank of India. Extra powers conferred on Reserve Bank of India. The Amending Act of 1968 also confers additional power on Reserve Bank of India under Section 35 Clause B, Clause 1, Clause B, 5B, Clause 1, Clause A. Next is Section 30, Clause 1A, Section 30, Clause 1B, and Section 30, Clause 1, Clause D, and Section 47A. While exercising those powers, Reserve Bank of India take into consideration the interest of the bank policy. And the next extra power that is conferred on Reserve Bank of India, that is the appointment, reappointment, remuneration and removal of the chairman and director of the banking company requires the approval of Reserve Bank of India. Likewise, the appointment, reappointment and remuneration of the auditor of a banking company requires the approval of RBI. And any amendment of the provisions in memorandum of article or the resolution of the general meeting or the board of directors pertaining to the appointment, reappointment and the termination of the appointment of remuneration of a chairman or managing director, manager, executive officer, director whole time या फिर half time, that shall not be valid unless approved by Reserve Bank of India. Further, the Reserve Bank of India has been empowered to direct the auditor to audit any special transaction which it may specify. Next power, that is Reserve Bank of India may also require a banking company to call a meeting of board of directors. And under section 47A, it empowers Reserve Bank of India to impose the penalty on a banking company when it contravenes any of the provisions or commits any default of any provision of this act and any order or direction thereunder. If we talk about the punishment to the banking employees, section 36 of the AD makes it unlawful to obstruct any person from unlawful entering into and leaving into the bank's office or obstructing any person from lawful carrying any business, then it may be punished by Reserve Bank of India. Second one is to hold within such office violent and demonstrations which are calculated to prevent the transactions of normal business, then also that employee may be punished. Third is to act in such a manner that calculated to the undermine the confidence of the depositors in the bank concern. So these are the certain circumstances where the bank employee should be punished. And the contravention of any of these provisions without any reasonable cause shall be punishable with the imprisonment up to the 6 months and fine or both. So this was all about the social control of the banking system. That is one of the most important questions for the examination point of view that has been asked for many times in the previous year questions. And if you have any doubt, then you must put down in the comment section. And don't forget to like, share and subscribe this channel for the further update. Thank you.